to everyone joining us today for our webinar, Grants Don't Matter Anymore, except when they do, Northern Ireland ERIS Explains. We're very happy to have you here. I'm Suze, Commercial Director here at WhisperClaims, and your host for today is our MD, co-founder and our subject expert, Jen Badger. Hello, Jen.
Hello.
Okay, so we've got a really good mix of familiar faces, many of our customers here, hello there, and some new names as well in the room. So for those of you, just in case you don't know us very well yet, we are WhisperClaims. We provide specialist software and support to accountants and advisors delivering R&DTax advice to their clients. And each month we run these sessions or sessions similar to this where we help to spread knowledge to tackle tricky areas of the legislation and bring clarity to topics that tend to generate the most debates or confusion in the R&DTax space. And today's session is one of those. We're focusing today on Northern Ireland ERIS and grants. This is a niche area, but an important one for anyone advising Northern Irish clients or anyone who simply wants to stay ahead of the changes under the merge scheme. And just to set some expectations, this is not a sales session. These sessions are not about selling. It's about clarity and facts and practical guidance. We will be showing you a very short demo of how our app supports Northern Ireland ERIS claims, but that's just to help bring the topic to life. If you are interested in a more in-depth look at our software, we've got a public app showcase next week. That one absolutely is salesy and intentionally so, and I'll give you some more details about that at the end of the session. So back to today. This session we will be covering a refresher about the older schemes and how grants interact, what's changed under the merge scheme, the new rules under this scheme. Jen's going to go into a bit more detail about that in a moment. If you do have any questions, please do feel free to drop those in the Q&A box as we go. We always get the best conversations from those, and we'll pick those up at the end in the Q&A. If you can leave the chat box for chatting to us or the audience more directly, that's great, just so that we don't lose any questions in there. If you happen to pop a question in there, don't worry, I'm sure we will find it and we will get to it. Handing over to you now, Jen.
Cool, thanks, Suze. Yes, so as Suze says, I'm going to do a quick, we've done our introductions. I'm going to do a quick explanation of how grants affected the SME scheme and the old RDEC scheme. I'm really hoping that's not a surprise to anyone, but just to re-emphasize that that is still a thing we need to think about. I'll talk about grants in the merge scheme, which again, I'm hoping it's not a surprise, is very quick slides to cover. But then I'm going to go into quite a deep dive into Northern Irish ERIS rules, criteria, and the actual calculations of what you need to think about when you are claiming Northern Irish ERIS. I will try and go very slowly. It is something that's very new. It's a very new way of thinking about things, and I might get tongue-tied, so I'm just warning you now that we'll be going through that very slowly, and then I can use our app, as Sue says, just to kind of demonstrate the kind of questions you need to be asking your clients and show how different amounts of de minimis aid, for example, can affect how you then prepare a claim for your clients. First of all, I'm going to hand back to Suze for a quick poll.
Yes, hello. Okay, so as we get started, and I really hope this works because I was having some technical problems earlier on, it would be really useful for us just to understand who we've got in the room today. We know, as we will say many times probably today, that Northern Ireland ERIS is a niche area and not every firm has Northern Ireland clients. So this is just to help us get a quick temperature check of who we have. So I'll just give you a couple of seconds just to fill that out there. Okay, that's really useful. So it sounds like this session is quite relevant for a good portion of you. More than anything, you have at least one or more clients, which is great. So we will make sure that we go into detail about the areas that are most relevant to you. I think you're all done. That's great. Thanks, everyone. That's really helpful. I will end that now and I will hand back to Jen.
Thanks, sorry, I have to close it, otherwise I can't see my screen. That's great, and thanks to 3 people who've turned up who don't have any Northern Irish ERIS clients. I hope you still get some value out of this session. So why are we talking about grants? Why are we still talking about grants? Key thing is that at the moment, I did a few weeks ago a little infographic for Suze, and realized that there's basically 9 different schemes or scheme combinations for claiming R&D tax relief. So that's everything from old SME, old RDEC, combinations of SME and RDEC, the R&D intensive scheme, all the way through to Northern Irish ERIS. So there's lots of different ways currently to claim, and that's still going to go on until next kind of February, March time, when all of the older SME and RDEC schemes, I say next, I mean 2027. So we've got another year and a bit of having all of these different ways of making claims. So even though under the merge scheme, grants are no longer affecting so much, grants do impact 2/3 of the ways you could be claiming R&D right now, and will continue to impact Northern Irish ERIS claims in the future. So it's still really important to be asking questions about grants and thinking about that when you are working with your clients and preparing claims. So, always does this where I can't get it to proceed. So very quickly, I think everyone should know this because it was the rules for a very, very long time. But under the older, so the SME, the R&D intensive, and the old RDEC schemes, two main rules. If a project received any state aid, all eligible R&D costs of that project have to be claimed under old RDEC rather than SME or the R&D intensive SME scheme. And then if a project had received any non-state or de minimis aid, the amount of the grant would be routed through old RDEC, and the remaining eligible spend could still go through the SME or the R&D intensive scheme. So again, this shouldn't be a surprise to anyone. What we have seen, obviously, since Brexit, the amount of notified state aids being awarded has essentially gone down to nothing. I haven't seen a notified state aid grant in quite a long time. So this has become, even before the merge scheme came out, the impact of grants on the older schemes has lessened just because there were fewer grants being awarded, or different types of grants post-Brexit. But it's still important to ask. It still affects these claims. And as I say, these claims will continue to wash through until kind of February, March 2027. So it's still something you need to be aware of if you're working with your clients on older claims. Now, as I've said already, under the new merged RDEC and ERIS schemes, grants have absolutely no effect on these claims. So brilliant. If you're working with a client, they're not based in Northern Ireland, they're claiming through the new merged scheme in ERIS, you can 100% ignore grants. And this is where the kind of general feel that everyone's like, oh, grants don't matter anymore has come from, is because essentially for a huge number of claims, huge proportion of the claims, it is actually completely irrelevant now and will be lovely. This is one of the few ways in which I feel that the merged schemes have actually been a simplification for people making claims. However, Northern Irish ERIS is the major exception to this, and actually for companies that are based in Northern Ireland and qualify for ERIS, it is a lot more complicated than it probably was, and it's definitely a lot more complicated than claiming not Northern Irish ERIS. So just to go through the basics of this, because I know not many people talked about it, it's not I want to say it's not mainstream, but it is quite niche. We've seen from our app and the claims we're seeing coming through, about 80% of companies are claiming new RDEC as opposed to ERIS. It was only about 20% of companies qualify for ERIS anyway. And then obviously the proportion of claims made in Northern Ireland is quite small. So it won't be a huge number of claims that are ever claims in Northern Irish ERIS, but it's still very important. And obviously for anyone based in Northern Ireland and working with Northern Irish companies all the time, this is hugely important. So just to go through the main differences between new RDEC. So to be from this point, if I'm saying RDEC, I mean new RDEC, otherwise I'm going to get very tongue-tied. So new RDEC, ERIS, and Northern Irish ERIS. So there's sort of a load of criteria that kind of cross over between the three. First one being if the company must be loss-making. So to make an RDEC claim, that's not necessary, but to qualify for ERIS or Northern Irish ERIS, the company has to be loss-making. They also have to be an SME. So RDEC is open to everybody, ERIS, Northern Irish ERIS, only for SMEs. To claim Northern Irish ERIS, company has to have a registered office in Northern Ireland. So that's not necessary for RDEC or ERIS, but it is for Northern Irish ERIS. And it's very clear it's a registered office. So not a presence, not an office. The company has to be registered in Northern Ireland for this for them to be able to claim Northern Irish ERIS. In common with all other ERIS claims, they must have a qualifying expenditure that's more than 30% of overall expenses. So that counts for both ERIS and Northern Irish ERIS and not RDEC. But the big difference and why you need to be thinking about this is that under RDEC and ERIS, overseas expenditure is restricted. So as you know, you can't claim for overseas costs related to subcontractors and EPWs under those schemes unless they're exempt, but that's a conversation for another day. For Northern Irish ERIS claims, there's no restriction on overseas expenditure. Mostly, I think, just to geographical reasons of if you have you're going to, if you're Northern Ireland, you're going to be working with Irish companies, companies based in the Republic of Ireland. So they have decided not to restrict overseas expenditure for these companies. The flip side of this is that Northern Irish ERIS claims are subject to de minimis limits. So you can have your overseas expenditure, but you have to keep under the de minimis cap. So there's a balance there that has to be struck between whether there's a huge amount of overseas expenditure, therefore it's worth claiming Northern Irish ERIS versus whether that's going to be subjected to the limits and therefore reduce the claim. So there's a lot to think about in here, and as you'll see later, the calculations on this can get quite complicated. I want to pretend you can simplify them, but they are quite complicated just to do with all the different kind of moving parts within this. So all Northern Irish companies can choose to claim through RDEC rather than ERIS. So they can just go, I don't care, I'm claiming RDEC. Doesn't matter whether I qualify for ERIS, I can claim through RDEC. So, and that actually counts for any company claiming. You can always choose to claim through RDEC rather than ERIS, regardless of which one, of whether you qualify for ERIS or not. That's always a choice to be made. But for Northern Irish companies, absolutely can just go, I don't want to deal with all that complicated mathematics. I'll just claim through RDEC. Companies that don't carry out a trade in goods or activities related to electricity can choose to opt out of the Northern Ireland provisions and claim through standard ERIS, the ERIS that's open to everyone else in the UK. Now, the definition of a trade in goods, according to the guidance, is that a company carries out a trade in goods if it trades in goods. It is not a very helpful definition, and it does say if there's any doubt, assume that what you do counts as trading in goods. So most companies would not be able to opt out, but if a company doesn't do any trading goods, doesn't do anything related to electricity, they could potentially opt out and choose to claim through all theirs. So that might be for a situation, a company might choose to opt out because they've got very little overseas costs or costs that would count as overseas, and they don't want to be caught by the de minimis limits, for example. So there might be some combination there, but again, it's only if there's no trading goods and no activities related to electricity. If a company does carry out trading goods or activities related to electricity, they can't opt out, and so they can only claim through either Northern Irish ERIS or RDEC. So they either go down the Northern Irish ERIS route, include all their overseas costs, and be subject to the de minimis limits, or they claim through RDEC. So that's where you need to start thinking about where's the best benefit for your client. Would it be to do the complications, look at the de minimis limits and be able to include all their overseas costs, or are their overseas costs so minimal that actually it doesn't make any difference to the amount they can be claimed? Obviously, the way you calculate the benefit and the potential benefit can be quite different through ERIS and RDEC anyway. So there's a lot to think about in that sort of decision-making process. So as I've said before, just to emphasize this again, Northern Irish ERIS claims are exempt from the restrictions on overseas, sorry, I can't see my own slide, overseas subcontract and EPW costs. So this means that if they're using a subcontractor based that carries out the work in the Republic of Ireland, that can still be included, whereas for someone in Scotland, for example, you wouldn't be able to include that. So could be very, very, it could be very important to the company if they do carry out a lot of their R&D using EPWs that aren't subject to PAYE or subcontractors that are carrying out the work outside of the UK. However, that only counts if they're claiming through Northern Irish ERIS. So if a Northern Irish-based company opts out of Northern Irish ERIS, the overseas restrictions apply. Or if they choose to claim through new RDEC, again, the overseas restrictions apply. So it's not about the company itself, it's about the scheme they're choosing to claim through. So it's not an automatic, if you're based in Northern Ireland, you have a registered address in Northern Ireland, you can claim your overseas costs. It's only if they qualify for Northern Irish ERIS and they claim through that. So just to make that clear that it's a scheme-based rule rather than about the sort of geographical location of the company itself. So the reason that the maths on this is quite complicated is that if a company is claiming to Northern Irish ERIS, they are subject to the restrictions on de minimis aid. So this is how much a company can receive over a 3-year period. For the purposes of R&D tax relief, this is the 3 accounting period. So it's not a calendar 3-year period. It's not the rolling sort of 12, 36 months that you might look at for other ways of looking at de minimis. For this purpose, it's the 3 claim periods leading up to this particular claim. Now, for most companies, this is 300,000 euros. If the company carries out activities related to agriculture, it's 50,000 euros. And for companies in fisheries or aquaculture, it's 30,000 euros. Now, I'm not going to get into it here because it's very, very niche and even more complicated, but there are ways that these might be combined. If the company carries out some activities in agriculture and some not in agriculture, then they potentially would be able to combine those limits. It's not rules I really understand and isn't particularly relevant to this. But I'm actually going to have to get up and shut that blind. Give me 30 seconds.
Not a technical issue, but a situational issue. It's a very sunny day in Edinburgh here today, which is unusual.
Sorry about that, everyone. I genuinely couldn't see my slides anymore. On the other side of this that is really important is that this includes support received by any group company. So when I'm talking about how this is calculating everything, you have to remember that any group companies, you've got to be looking at the de minimis aid they've received as well. The limit applies to the group, not just a single company. So there's quite a lot of potentially quite a lot of information needs to be gathered about the activities they're carrying out, the kind of sectors they're working in, and what the group companies have been doing as well before you can actually do any calculations on this. So to work out whether a Northern Irish ERIS claim is actually going to breach the de minimis limits, you've got to look at, first of all, any de minimis aid received by the company in the previous 3 accounting periods in the 3 years. So that's any grants, mostly grants, subsidies, anything that counts as de minimis aid, you'd need to look at here. And also, as I said, any de minimis aid received by any group company in the previous 3 years. You need to remember here, and it might have put this on the later slide, I might not open this, I'm going to say it now because it's popped into my head, that employment allowance counts as de minimis aid. So it's only a very small amount. You know, if you've had the 3 years worth of 10K of employment allowance, it's not going to push you automatically over the limit, but if there's been other grants received, it's something you need to add in. It gets more complicated because then what you also have to do is look at the tax benefit received by the company from previous Northern Irish ERIS claims. So you need to know, obviously right now, no company has a previous Northern Irish ERIS claim. So the first year of doing this is going to be really nice. But as those claims start kind of building up and you've got 3, if you've done it consistently for the last 3 years, you've got to look at all of those. So you've got to look at what was received through ERIS and what would have been received had the claim been put through RDEC. So it's not the total amount of benefit received through ERIS, it's what the extra bit that came through the Northern Irish ERIS over and above what would have been received through RDEC. So for some claims, that's going to be very, very similar because there's no overseas costs and therefore the stuff claimed through RDEC was the same as the stuff claimed through Northern Irish ERIS, and there'll be a very small difference to do with, you know, the credit rates and all of that kind of thing. But actually, when we've been doing our testing of the system here, unless you put in huge amounts of overseas expenditure, it's actually quite hard to get a big difference between what's claimed through ERIS and what's claimed through RDEC. But it is that difference that's important, not the amount, not the kind of, you know, if you got 50K of benefits, but you would have got 45K of benefits through RDEC, the difference is only 5K, it's not the 50K. So again, you've got to be looking back. You need to know for previous ERIS claims quite a lot of information about those claims, the eligible expenditure, the overseas cost, and therefore what would have been claimed through RDEC. So again, quite a lot to think about as you're going through this. So I'm going to attempt to give a few examples of what this looks like in real life. I hope my maths are correct. They should be correct. But if I've made any typos, any issues, I'm very, very sorry. But we take this as big picture thing of the idea of how this works. So our example company has received, again, I've put too many zeros there, 50,000 euros in de minimis aid in the last 3 years. They're not part of a group and they've not claimed Northern Irish ERIS before. So the only amount of de minimis aid we need to think about is that £50,000 they've received. Their eligible expenditure for this claim is £100,000 and the overseas subcontractor cost is £50,000. Now, this is already illustrating another complication with this, which is de minimis aid is measured in euros, and obviously we're working in pounds. So we also need to be thinking about exchange rates, which is going to become important as I start going through the calculations. So very basic situation, no previous claims, a small amount of previous de minimis aid, and there's no group companies that we need to think about. So we're going to look at the Northern Irish ERIS tax benefit from this claim. So it's 86% enhancement, 40.5% tax credit rate. So you're getting 26,970. I made this as simple as I possibly could, so I made it a huge loss. So we're going to go with that's what this company would have got. So they would receive £26,970 if they claim through Northern Irish ERIS. The potential RDEC benefit. So you've got that £100,000 of eligible expenditure. However, you're going to take off the overseas subcontractor costs. You've got your 20% tax credit rate. You're paying tax on that. So the actual benefit through RDEC is £8,100. Which means the net benefit of claiming through Northern Irish ERIS compared with claiming through RDEC is £18,870. So the difference you can see there, but I deliberately put a huge amount of overseas subcontractor costs, proportionally for the eligible expenditure just to get a big difference. So overall, you've got that difference. So then you need to look at the de minimis received, including this claim, to check that it doesn't breach the cap. So we've got £50,000 that they received before. That 18,870 actually comes to about 21,512 euros, depending on the day and the exchange rate. So the overall de minimis that will have been received once this claim has gone in is 71,512 euros. So this claim would not cause it to breach the de minimis limit. Nothing needs to be changed. This can be claimed. All of the cost of this claim can go through Northern Irish ERIS. So that's your nice, simple, easy situation. Second example is where they've had significantly more de minimis aid. So they've had 250,000, so many zeros on there, 250,000 euros of de minimis aid, the company itself, and then group companies have received £50,000 worth of de minimis aid. So they've had a huge amount received by the company itself and the group. They've not claimed Northern Irish ERIS previously, and the eligible expenditure for this claim is £100,000. So in this situation, as I'm sure everyone that's on this call can see, the previous de minimis received is already 300,000 euros. So the de minimis cap's already been reached. So this claim cannot be made through Northern Irish ERIS. Any amount that goes to Northern Irish ERIS would breach that cap. So therefore, everything has to be routed through RDEC. So again, that's a fairly simple situation where you can see fairly simply that the cap has been reached and there's just no choice. The claim has to be made through RDEC instead of Northern Irish ERIS. So our third example, the company's received 250,000 euros in de minimis aid in the last 3 years, not part of the group this time. They've not claimed Northern Irish ERIS. So the eligible expenditure for this claim is £250,000 with overseas subcontractor costs of £150,000. So a slightly bigger claim just to get the numbers I need. So in this situation, the potential benefit they get from this claim through Northern Irish ERIS, doing the maths, is £67,425, and the potential RDEC benefit, because so much of it is overseas cost, is actually significantly lower, so it's £16,200. So there's a huge difference there between the two things. So the net benefit of making the Northern Irish ERIS claim is actually £51,225. So a really, really big net benefit through ERIS. So when you then, sorry, I've realised there's a small typo there, but the de minimis received, including this claim, is the 250,000 euros plus the £51,000 converted into euros, which is not 21,000 euros, it's much higher, but that comes to 308,396 euros. So that does breach the de minimis limit. So what does that mean? Because obviously you cannot claim all of the eligible expenditure of this claim through ERIS, otherwise you'll breach the de minimis limits. So what the company has to do in this situation is split the claim between the Northern Irish ERIS and RDEC schemes. This is where the maths get very complicated, and I will admit that the way I got to this was just going, okay, what's the net benefit if it's 220k? What's the net benefit if it's 215? And I worked out that way. You need to work out and obviously that net benefit can change because obviously it's dependent on the profit loss position and all of that kind of thing. So this is actually quite a difficult thing to work out. So here, what I basically came to was that the amount claimed to Northern Irish ERIS could be reduced to £210,000 without breaching the limits, and then that remaining £40,000 minus a proportion of the overseas costs would be claimed through new RDEC. So that just looks like this. So you end up with a net benefit from the Northern Irish ERIS claim of £43,029, which means the de minimis received, including this claim, is €299,053. So it doesn't breach the de minimis limit, and then you'll have a small amount that goes through the new RDEC. So as you can see, there's quite a lot to think about when you're looking at, okay, what's the benefit through ERIS? What's the benefit through RDEC? What's the best way to do this? What's the previous de minimis? Even what are the exchange rates I have to use to make sure that I'm doing this correctly? So there's a huge amount to think about for this. And you've always got to be thinking about that de minimis limit as you go through. And it's going to get more complicated as the years go on, because as I say, you'll potentially have 3 years worth of Northern Irish ERIS claims that you've got to do. That first calculation is the same way you'd calculate it for anything, is go, this is the benefit we did get, here's what we would have got through RDEC. So there's a lot to be kind of working through for each of these claims. So what you need to think about really when you're gathering this is making sure you are getting that information on de minimis aid received by the claimant company and any group companies. And even if so, in that situation in the first year where they've had £50,000 and the claim's quite small, it's not breaching it then, it's still so important that you get that information, because you might find in 3 years' time, if they've got much bigger Northern Irish ERIS claims using a lot of overseas expenditure, that actually they might breach the limit even with that one small grant received in the first year. So you need to be gathering all this information on a continual basis just to make sure that you're keeping on top of it and you've got all the information you need. You need to think about the employment allowance, as I say. So, and all of this is for the claimant company and any group companies. And you need all that information on any previous ERIS, Northern Irish ERIS claims. So qualifying expenditure and the benefit received, and also what proportion of that qualifying expenditure is overseas expenditure and therefore would have to be excluded from an RDEC claim. So there's a lot you need to be gathering. As I say, you need to be gathering that as you go, even if it's not relevant to that year's claim. It's still really important to have a record of it so that in 3 years' time, you know you've got all the information there and you know you're still making a valid claim. So I'm going to jump on to just change my sharing briefly. Maybe 30 seconds to do this. Okay. And we're just jumping into the WhisperClaims app. Is that showing okay there, Suze?
Yeah, got that.
Brilliant. Okay. So I'm just showing the kind of questions we have put into the app just to show the kind of things you need to be thinking about and show how it kind of works more in practice. So we have a Northern Irish company. For example, here, first of all, we're jumping straight into, did they have a trade in goods? Did they do anything related to generation, transmission, distribution, or supply of electricity? If the company was to say no to both of those questions, they'll then be said, okay, has the company chosen to opt out? This allows us as a company to, or as a software system, to route the expenditure straight away and ask the right questions and make sure that if they've just decided to opt out, then we don't need to worry about Northern Irish ERIS any further. If they have, if they haven't, then we need to keep going. So again, you need to be thinking about with your client, first thing to think about is, can they opt out and should they opt out? Everything else about the claim is the same. So the way you gather the information about the projects, what eligible expenditure looks like, what costs you're looking at, everything is the same. But we need to then start thinking about de minimis aid and that kind of thing. So I've got here, put in that the company has received £50,000 in de minimis aid during this claim period, and it was claimed by the claimant company or a group company. We just put that in as a note so that it's much easier when you go back to identify which de minimis aid is which. So you're gathering the de minimis aid, and then you're potentially thinking about the previous claim. So you've got one here where they got £50,000 through ERIS, you know what date it was submitted, and then you've got the qualifying expenditure and the non-exempt overseas costs. So again, we're just gathering all those pieces so that we can do the calculations at the end. And what this comes out to when we go to our review screen, and I'll scroll down to the Northern Irish ERIS data, so you can see here, they have met the R&D intensive criteria. They got 36%. Sorry, their R&D spend represents 36% of their overall spend. And we've got details about all of this information. So we know that the total benefits, including this claim received in 3 years, is 110,726. So we're not breaching the cap. So all of the expenditure goes through ERIS. So you can see we're working through everything to make sure that it's going through the right scheme. If, for example, this number is actually 250,000, and I go back to that review screen, what we're going to see is that the software is now saying this all needs to be routed through RDEC. And that is because when I scroll down to here, this claim would completely breach. So the previous amount received is so high that it's already breaching the limit. So even this claim would just push it further over. So everything goes through RDEC. Another key thing to realize is you saw that the amount going through ERIS is £270,000 and the amount going through RDEC is 220. That's the exclusion of all the overseas costs. So again, you've got to be thinking about all of that each time when you flip between the different schemes, the different ways of claiming, making sure you are only claiming the things that actually are valid. One last just little demonstration of this. If I now make this 210,000 and I go back, now you can see that the software has limited it so that if including this amount here, if you put £70,000 worth of the eligible expenditures through ERIS, that takes you to the cap and no further, and then it's routing everything else through RDEC, and it will have excluded any overseas costs from this number as well. So again, every time you're looking at this, every time you're adjusting something, potentially looking at, okay, if I put this much through ERIS, what does that look like? If I put this much through RDEC, what does that look like? You've got to be going back and doing these kind of iterative calculations just to make sure that everything's correct. You've got to be making sure you're excluding overseas costs when and where you should be excluding them. So there's a lot to be thinking about within this. All right, I'm going to jump back to my slides, which shouldn't take quite as long as the last one did. Okay, so I think Susie's going to pop up another poll before we get to the Q&A section.
Yeah, thanks, Jen. That was great. Let me just go back and get our second all up. So just to give Jen a bit of a break from all the talking before we go to questions, it would be really great just to get a feel now that you've heard everything that Jen's gone through. I'm sure there was a lot of knowledge in the room already. Which areas do you think you might find most challenging when you're preparing claims under, you know, the new scheme? Some of you may already have experience, some of you may be a bit blindsided by everything that you've heard today. It'd just be good to understand what you think. Oh, big jump already, tracking the grants. That makes sense, especially with NI ERIS now being in scope. And it's probably exactly where small mistakes can cause big compliance issues as well. That's overwhelming.
Mm-hmm.
Yeah.
And that is an interesting point. And I think back in my previous life when I was doing a lot of claims, getting information about group companies is always challenging when you're looking at, for example, SME status and you've got to work out staff numbers from group companies. It is difficult. So I think that does reflect the reality of what these claims are going to be like. Is the maths is difficult, deciding where to go with this, but actually just having that information in the first place will be really difficult. And it's going to be interesting to see actually how this starts to work in practice and what people are having to, the kind of processes people have to put in practice to make this work and make sure they've got the information. Because as I say, it might be that there's a tiny grant now you think is irrelevant, and then in 3 years' time, with the accumulation of Northern Irish ERIS claims, actually it becomes really, really important.
Yeah. Thanks, everyone. I will just learn that poll now. I'll quickly share the results. I think you can see that. If you can't, I'm really sorry, but I will make sure that this is in the recording if you can't. But there you go. Okay, so we do have a question. Got a couple of questions actually. I'll kick off with the first one for you, Jen, from David. Thank you, David. Do cloud computing costs, AWS especially, count as overseas expenditure?
They do not. So the overseas expenditure rules only count for subcontractors and EPWs. So it doesn't matter if, for example, your employees are based somewhere else, as long as they're actual employees, that is fine. It doesn't matter, if you use AWS after this week. That's a very relevant point around the fact that AWS is not based in Europe. So yeah, there's a huge there's a huge number of costs that it really doesn't matter where they come from. You can be buying your raw materials from overseas and shipping them in. That is absolutely fine. The only time it matters is for subcontractors and EPWs. And then it's a slightly weird thing with, so for subcontractors, it's the location of the subcontractor and where the R&D activities take place that's important. So you can use a subcontractor, you could use an American company as a subcontractor, as long as the subcontractor themselves does the R&D activities in the UK. So it matters where the work is done, not who you're paying, if that makes sense. Whereas with the EPWs, again, it doesn't actually matter with an EPW physically where they are in the world, as long as they're being paid through UK PAYE. So we've done sessions on that. We'll probably do more sessions on that. But yeah, those two things are actually more complicated than they first appear. But yeah, no other costs are affected by the overseas restrictions.
Great. Thanks, Jen. And thank you, Hannah. Thanks so much for the informative session, really helpful. That's really nice to hear, and that's good to hear as well. I do have another question here that got sent through chat. How do we practically track de minimis aid across linked companies or groups, and what happens if the client isn't fully aware of what their group has received?
So I would say, and to be honest, I don't have a good answer for this because it would depend on the group, it depends on the types of aid being received. What you would hope is that the companies within the group are friendly enough, but I understand that if you've got group companies that actually have very little to do with each other, this would be very, very difficult. So I don't necessarily have practical advice on that. There was a second half to that, Suze, that I've forgotten.
What happens if
yeah, so my advice would be if the company can't access that information, they should just make a claim through RDEC. It's not worth potentially ending up with compliance checks or potentially ending up in trouble with other bodies that look after kind of de minimis aid and how that is distributed and all that kind of thing. You don't want them not having the information enough to be able to apply for aid themselves, that kind of thing. So if you can't access it, if it's just inaccessible to you, my advice would be just claim through RDEC and take the hit on the overseas expenditure. And that's really the kind of conversations you need to have with your client is, you know, how much of this claim is overseas expenditure and how much hassle and difficulty you're going to have getting the information we need to be able to claim to Northern Irish ERIS. If there's very little overseas expenditure and the difference in the claim, the difference between claiming through RDEC and Northern Irish ERIS is very small, it might not be worth the time, effort and cost it takes to dig out, you know, 3 years worth of de minimis information from group companies. Whereas if it's that they're going to get tens of thousands of pounds more through Northern Irish ERIS versus claiming through RDEC, then it might be worth going through all that hassle. So the thing is, again, just conversations you're going to have with your client about whether it's worth it and if it's worth it. Who can they go to? You'd hope there'd be some group FD, someone like that would hold that information. If they don't, it will be very difficult. And I can understand from a practical point of view, this might be something where companies just end up, because the hassle is so big, just claiming through RDEC and taking the hit.
To wait and see, won't we? Okay, I have another one. This is an app-based one. So our app does produce an additional information form output as well as the report. So this one is, will the additional information form output automatically reflect the NI ERIS decision, or do we need to do anything additional in our submission?
So yeah, our AIF will have the answers to all the questions that AIF asks around de minimis aid and whether the limit's being breached. And then we will always break the cost down into RDEC, ERIS, all RDEC, just depending on what you decide to do and what decisions you've made, that will be reflected in the AIF. So you don't have to do anything else over and above with your submission. I'm saying this and then I'm realizing that I'm not sure. It would depend also on your tax filing software, but we will give you, you know, the AIF or give you all the information you need to be able to fill out the tax filing software. I can't say for sure exactly what questions will be asked within all the individual kind of ways of filling out the tax filing information.
Okay, thanks, Jen. I've got one more, so just a heads up, if anybody's got any other questions, please do feel free to pop them in the chat or in the Q&A box. If not, then we can bring them to a close. But so this is a forward-thinking question, actually. So do you know what HMRC's current views are on NI ERIS? Is it likely to be a focus for future compliance activity?
I mean, that's basically an impossible question to answer at this point. It's something I'm being asked a lot as we do these sessions, as I do some training. What's HMRC's attitude to the new merge schemes overall? How do they feel at Northern Irish ERIS? And the answer is we just don't know at the moment. We're only really 6 months into claims being submitted under the merge scheme. So we have seen through our app, it's still a really small percentage of claims that are coming through that are actually being claimed through the merge scheme. We're expecting, obviously, a large number of those to start coming through as we head towards the tax deadline for the March 2025 claims. Sorry. So we should see a load more coming through over the next quarter, really. However, obviously, then we need to wait for HMRC to start opening compliance checks and see what behaviour they display in that. We're going to have to see what the RDEC say, so the R&D Consultative Committee, whether they've got any opinions on these kind of the first few claims that have been washing through. As anyone that's done this for any amount of time knows, it's really, really hard to get direct feedback from HMRC on how they feel about the schemes, the claims being made, anything like that. I would hope it's not going to be any more of a focus for compliance activity than anywhere else. I think because it's more complicated, it's potentially something they would look at some point. We know, obviously, our experience of the last few years is that HMRC, when carrying out compliance activity, will quite often pick a sector, a size of claim, a particular area to open a kind of bulk compliance check review into. So potentially they could at some point decide to look at a chunk of the Northern Irish ERIS claims. There's just no way to know right now. Obviously, with the AIF in place, they're going to know exactly which claims are being made through Northern Irish ERIS because you have to say that in the AIF. So it's very easy for them to gather the information on how many claims are coming through, what kind of de minimis aid levels they're looking at, whether that's reflective of what they would expect to see, all of that kind of thing. What they do with that information is anyone's guess at this stage.
Indeed. Okay, so we don't have...
Actually, one just popped up, Suze, in the Q&A.
All right, thank you, Jen. What's your thoughts on trends for overall R&D compliance checks over the past 12 months since the introduction of the merged ERIS scheme?
So again, we don't do claims, so we don't get compliance checks ourselves. So we have to kind of go on third-party information in this. So I always caveat that with this is my general impression. It wouldn't necessarily be absolutely reflective of the truth. It does feel like we're getting fewer compliance checks over the last 12 months. I will say that I don't know that the introduction of the merge scheme is the reason for that or has it had an impact on that, because obviously it's only for claims starting on after 1st April 2024. So the majority of those accounting periods, the ends of those will have started to come through at the end of March 2025. So we're not seeing a huge number of those claims coming through yet at all. So I don't know whether HMRC will change the behaviour as they're getting more and more claims made through the new RDEC and ERIS schemes. We just don't know. But there's definitely been, it seems, a reduction in the number of compliance checks, definitely a reduction in the number of kind of one-to-many so far. And I feel like we're seeing a lot more targeted activity where they're picking particular advisors, particular types of claims. It definitely feels like it's dropped back down to probably 15 to 20% of claims. Again, it's really hard to say because they don't publish information on this. We're hearing less about compliance. There's still a lot of compliance activity going on. It's still less than it was maybe a year or so ago. Whether this picks up again as more merge scheme things wash through, just so that HMRC can really test how the new rules are being applied, whether people are managing to apply the new, for example, overseas restrictions appropriately. We might see another kind of a peak in compliance activity just as they're kind of checking how this is going. But for now, the trend seems to be in a nice kind of downward direction and in a far more targeted direction, if that makes sense.
Definitely. Thanks. Great question, Jay. Thank you. Okay, well, that might be all the questions. If anybody does have any, we're just bang on about ready to finish. So we don't want to keep you all from your lunch breaks, but I'll just do a quick wrap up and And if anybody does have any questions, we might have a minute to answer them. But just to say thank you so much, everyone, for joining us today. We hope very much so that the session has been valuable and given some clarity around the NI ERIS scheme grants and how these rules all apply in practice. We will be sending out a recording of the session today by tomorrow, so don't worry if you missed any parts or you couldn't stay for the whole session or had to dip in and out. As mentioned at the start, if you'd like to explore how WhisperClaims can help you deliver your R&DTax service with more structure and efficiency and keep you on the right side of HMRC, our app showcase webinar is happening next week, and you're very welcome to join us for that. It will be on Wednesday, the 29th of October at 12 noon. There's a link in the chat I've just posted. Equally, if you prefer a one-to-one chat, please do get in touch. My contact details are also in the chat. And finally, just a quick look ahead, next month's session, we're going to be revisiting the merge scheme in full as we move into the latter stages of its first kind of full year in implementation. So we'll be doing our best to help firms ensure that they're fully up to speed with all the changes and confidently preparing claims under the new regime going into 2026 and beyond. So look out for an invite in your inbox in the next few weeks or so. No more questions. So yeah, thank you so much, Jen. Thank you everyone for your time today. And yeah, we look forward to seeing you at our next session. Have a great rest of your Wednesday and the rest of your week. We will see you again soon. Thank you. Thanks, Andrew. Thanks. Bye-bye.